All right. Well, welcome to Stock Market Review on this great Wednesday here. It's February 28th, 2024. Welcome. All right. I'm going to go over some administrational items. The market is doing really well, especially Bitcoin. We're going to look at Bitcoin. Hopefully everybody got into that. I'll go over some stats on that one. That is definitely cranking, and I don't see it turning back for quite some time. All right, so let's jump in. We'll go through the administrational items and then get to the charts. First thing I want to go over, of course, are the risks involved in trading. Like I always say, without those risks, there are no opportunities. So the two go hand in hand. We want you to be aware of the risks. You always want to trade with money you can afford to risk, called risk capital. We also really strongly suggest you calculate your trade size to keep your risk in line on each and every trade. That's really important. And we can help you with that. I got a couple of really good books on how to do that. Also, too, check with your financial advisor or whoever manages your money to be sure anything we talk about today is suitable for you. We don't know your personal situation, and of course, they do. We deal in a realm of probability, so there's no guarantees in the market. Even when we have a structured edge in the market, you don't always win, okay? So you have to do risk control on each and every trade. Super, super important stuff. All right, books that can help you. Traders Money Management System on the far left and the Money Management for Traders second from the right. We also have books on Elliott Wave, Survival Guide for Traders. My newest book coming out and being published by Wiley this year is The Art of Trading, second edition. Going to be a great book. You can pre-order that now. It's going to be a pretty good sized book, around 450 pages, a lot of good material. Highlighting what's new in the markets today, and of course, area on all our new software since the original book came out in 2008. Elliott Wave Techniques still is on one of the bestseller lists, and that is on the Elliott Wave, published by McGraw-Hill, and you can pick up that as well. I'll put a link in the recording down below. All right, so Wednesday, economic announcements. I do like to go over these really quickly before we get to the charts. Mortgage apps have come out. You know, the mortgage industry is hurting right now. No matter what you read, from what I hear, the applications are probably near their lows that they've been in quite some time. I'll leave it at that. GDP comes out, international trade in goods comes out, retail inventories, wholesale inventories, EIA petroleum status report, survey of business uncertainty comes out. Whatever the heck that is. All right, jobless claims on Thursday, personal income and outlays, Chicago PMI, pending home sales, Fed balance sheet. We're going to talk about real estate a little bit more in the event today. And then Friday, March 1st, PMI, ISM, construction spending, consumer sentiment, and the weekly Baker Hughes rig count. So that's all coming out. All right, I'm going to switch to full screen here, and then we'll come back towards the end. All right, so that's that. When we deal with charts, we're going to be looking at software, and this is software I developed over my last 30 plus years trading the financial markets. We have charting software, we have scanning software, and risk control software. My feeling is you have to be able to find stocks. That's the purpose of the scanning software. And then once you find them, you got to be able to determine how you're going to enter and exit the market. That's the charting software tools. And then, of course, I'm very big on risk control on each and every trade. So that is the risk control software. All right, let's come out of this here and go into the Dow Jones Industrial Average. All right, so we're working our way up to this target here, okay? And so in terms of an Elliott Wave, focus on this center chart here. This is a 3, this is a 4, this is a 5. So the target for the Dow for this analysis based on Fibonacci extensions and the Elliott Wave is 40,352 up to 47,599. So that's kind of where we're heading. And I'm going to open this chart up full blown here so you can see it a little bit better. And as you can see, you know, the market has been really rocking up ever since basically in the year 2020 coming up. Then we had a big pullback, and now we have this big move up. So again, 3, 4, 5. This is the target for Elliott Wave 5. And we're getting closer and closer and closer. Now, I do anticipate a pullback at some point back into, a fib retracement area here. And I'll go over that in the 60-minute chart. I've been talking about that every week. It really hasn't been full blown yet, but we're going to see how it's coming along. And then after this pullback, I expect the market to recover and make another high. There's a lot of people out there saying the market's done, saying the market's going to sell off in March. All that's possible, all right? But usually we don't in the markets hit those particular types of sell-off points until we get into the target Fibonacci. And this target has a 70% probability of where most wave fives reach. There's a 15% probability only that the market could sell off at any time until it reaches that target. Once it reaches that target, then the probabilities shift to more of a 70% stance. So, and of course, it can go a little higher. Another 15% of the times, they actually go to the upper limits and exceed this bracket by a little bit. That's called an extended wave five. So in this case here, we could have a failed wave five. That happens 15% of the time. It did go above wave three. So that's a requirement for wave five. 70% of the time, it goes into the target and then sells off. So until we get into that target, I'm not going to cry wolf. Okay, that's the bottom line here. So I'm kind of thinking it's got to get into that target zone before we get really concerned that we're at the end of this tremendous run that we have been in. Now, with that said, I do expect that pullback, and who knows what will cause that? Maybe just some profit taking, maybe some short-term reaction to some news or world event. That's possible. But whatever it is, it should be just a pullback. That's the key. Now, if by chance this is a failed five and the market keeps taking a dive and goes below this support level here, created in the early part or late part, I guess, of 2023, then we got a problem. Okay, and we'll talk about that when that happens. So until that happens, I would anticipate just a minor pullback, and this bull run should continue until it gets exhausted into the target zone. And that target zone is 40,352 up to 47,599, and we are roughly at 38,884 right now. So we're close. Okay, we are definitely getting close. So that the next thing to talk about is what happens when it reaches the target zone. Well, when it reaches the target zone, that's going to be the end of wave five, like I said, on this daily chart. And on the longer term charts, like the weekly chart, that is going to be the end of a major wave three. And so that means after a wave three, you have a wave four correction. Now on this chart, when we hit wave three here, this was our wave four correction here. And so if you go to a longer term chart, you have to draw the fibs again, and the retracement levels are quite low. So when we top out here on wave five, I'll start sharing that information. So you definitely want to keep coming back every week. But that will be a tremendous sell-off at that time when it comes. So maybe latter part, late 2024 into 2025, we'll see that, unless we have a failed wave five and it goes on down from here. All right, so that's kind of where we are now on the overall markets. And I do want to take a look at the actual, and here's the retracement zone here. Let me just, before I forget that, this is the retracement zone that we could possibly see during the next pullback, okay? So here we are here. So if the market's pulled back here, then they would probably go to here and then back up. So that's kind of what we're thinking is a zone that I call it a profit taking zone that we could see between 36,618 down to 34,966. So that is possible. And we could be kind of on our way there. We haven't taken out the high recently. This is a 60-minute chart, so every price bar represents basically an hour. Okay, and we have red down here in our indicators here, so we could be heading into this area now, but it's a little too early to tell. All right, so we'll keep an eye on that. All right, the next one I want to focus on today, of course, is Bitcoin. I want to take a look at that before we go on much further here. Okay, so on Bitcoin here, look at it. We're still going up today. So let me just go over a little bit here. If you recall, many months ago, go back to like October, September area, for those of you that subscribe to my stock picking service called the Moric service, we actually initiated a buy on this under the $10 mark. So it's basically at the current levels here is up around 45 points. All right, so it's at 55.13. I think it's going above 100,000. That's going to be my prediction, which would be $100 on the GBTC. Now, there's many different ways you can participate in this market. One is to buy BTC. Okay, there's a futures way of doing it. You can buy GBTC, which I have in front of you, which is a ETF. It's a stock, behaves like a stock. And so most people that aren't familiar with wallets and the futures markets, GBTC is probably your best bet because it's simple. You just buy it like you would a stock, right? So, you know, you got to keep that in mind in doing things. You want to make sure you're in an area you're familiar with. And so most people, I would just recommend GBTC unless they're fairly sophisticated in the Bitcoin arena. But what a tremendous move. All right. And, you know, Bitcoin, if we open up the weekly chart here, went all the way up and all the way down. And so now it looks like it's just taking off. So I think this was a 1, 2. We're in a Elliott Wave 3. And I think we're probably inside the 3 of 3. So this is going to be the most incredible wave of all right now on the daily chart. We're in 3. And you can certainly see this is moving very, very characteristically of a wave 3, which is one of the most strongest waves in a move. Now, after wave 3, you'll get your wave 4. But the thing is wave 3 is not over yet. Okay, it's still moving down. Do you want to chase this market? I guess that's, you know, this is a tough call. If you don't get in early, then you're kind of sitting here scratching your head on what to do on a move that's gotten away from you. And that's why I always try to get in early, because it makes life a lot simpler. Because if you go in now and you have a pullback, you got to suffer the pullback before you see any more movement to the upside. And hopefully you didn't get in at the end of the total trend and don't get that next movement upside, right? So in this I do feel you're going to have to talk to your financial advisor, or you know, if you have risk capital you want to put in there and you don't care if it pulls back to down into the maybe 30s or 40s, depending on when this thing ends. We'll see. The higher this goes before the pullback, the higher this little target, profit taking target zone moves up. So that's this is not set in stone right now. So this 40.74 down to 31.63, which is in between these blue lines here for a profit taking pullback area, assumes that the market is done going up for this particular wave, and I don't think it has. So we'll probably be redrawing this back to the upside, okay? So keep that in mind as well. All right, so that's kind of where we're at right now. And I hope many of you were able to get in it. If you were able to get in it, let us know in the comments area. And you don't have to tell us how much you went into it, but I'd be very interested to know if we have any folks that did get in there, because I just think it's a tremendous, tremendous opportunity. Okay, so really super. All right, so I do want to move on. Let me bring up another chart here. Give me 1 second. I got to find it. And I do want to talk a little bit about the overall real estate market at this time. And so with that, 1 second. Okay, so here is real estate prices in coordination with the CPI index. So when we talk about the Case-Shiller index, what that is, it's a measure of the average home prices in the United States in residential real estate. It's not commercial. So this is the Case-Shiller index in red here, and this is it down here for the CPI. All right, the CPI is the Consumer Price Index, which measures inflation. The average home prices have generally been an investment vehicle because it's always kept up with inflation. It's done better for inflation. And so you can certainly see that. However, when it gets extended from the CPI, that usually indicates a bubble of some proportion. And back in 2008, we could see that bubble here, all right? And it was extended for quite some time. I mean, several years. So you can have a bubble that remains bubbled for quite some time, but eventually the rubber band pulls back, right? And it comes back down closer to the CPI, which is this line right here. And then you get a recovery and it moves back up on its next move. Now we had low interest rates. We had the government had extremely low interest rates back in the middle of 2012, 2014 to basically counteract the market that had pulled back from the 2008. So that created more buying activity. And then we had, of course, COVID, and basically they allowed people to stay in their homes, which dried up the supply. People didn't bother selling because they didn't have to pay their mortgage during COVID because of the government subsidies. And then, of course, more money was pumped into the market. Rates were as low as they could go, basically, and housing took off. People moved out of the cities and remoted in from the suburbs because that was a thing to do back then. And here we are at this incredible bubble currently right now. And it's still there, all right? You have some areas that are softening, all right? But, you have a lot of builders still building. They've overbuilt, I think, in some areas. I think Myrtle Beach, they've overbuilt in for some of these places. But it's going to be kind of interesting because, again, I expect that rubber band eventually to pull back closer to the CPI on the on this graph. Question is when. Don't have that kind of crystal ball, but maybe it will stay high as long as the markets stay up there. But I think basically transactions are very small right now. Mortgage applications are very small right now. People are hanging on to their low interest rate mortgages. The supply coming onto the market is very, very small, especially when you compare it to historical levels. So I think what you're seeing here is if you have any foreclosures, a lot of people think foreclosures are looming because people are having a hard time. They have so much debt now. So that kind of thing makes it very difficult for people to continue forward without satisfying that debt. So we'll see what happens. All right. But I think it's just a matter of when, not if, when that rubber band pulls back. Let me magnify this a little bit for you there at home. This is the home value to income ratios back in 2023 done by RE Venture Consulting. Nice graph they did on this, indicating once again a bubble even back in 2023. I think it's even worse now. Home prices were 31% overvalued compared to income levels in America back then. I bet it's even 40% now. And so people housing is unaffordable, okay? Plain and simple, all right? Regardless, even if the interest rates came down a little bit, it would help, but they would have to come down a lot. And I don't see that happening. I see the Fed, many people thought the interest rates were going to be dropped 6 times this year. I don't see that happening. I think you'd be lucky if you get 2, okay? 2 25 basis point drops, okay? So we'll certainly see, all right? Certainly see. Okay, the next chart here is debt to income ratios. This is even worse now too. This was back in the summer of 2023. So the home buyer debt to ratio is averaging back then 40%. All right, so people are carrying so much debt, all right, that it makes housing once again unaffordable. Too much debt they're carrying. And so you got a bubble condition. So every graph you basically look at in real estate is indicating at this particular point, or at least showing a bubble. And it has burst in some areas to some degree, but not a lot. Like Austin, Texas, all right, is feeling it right now, but not to the levels that we anticipate, or at least I anticipate, which would be another 40% down. So that would be quite a sell-off in the real estate market. And Again, I think it's a matter of when, not if. All right. If anybody has anything going on into their area, feel free to please let me know how real estate's going into your area. Let us all know. I think it'd be kind of interesting to see how that's going. All right. Let me just go back real quick. I want to just take a look at the S&P. The S&P here has reached, broken its high. Of course, it did that about a week or two ago. So that's on track as expected. Okay, this is our target zone for the S&P 5652 up to 6988 and getting ever closer. Okay. Also, too, you've got the NASDAQ as well. All right, and that's kind of in a short-term target zone. So I'm thinking maybe a little pullback in the markets are due at any time. So I think that's kind of important. Here is the chart I was showing you before that I did on Sunday for my subscribers. This is the daily chart for the Dow Jones Industrial Average, showing how close we are to the Wave 5 target zone. And again, I would expect a pullback before getting there, but we are getting close, extremely close. All right, so keep an eye on that, and we will do the same for you. Keep coming back here. I want to look at a couple more stocks here. Coinbase is another one that's in the crypto area that's very popular. And this is this again is an ETF. So if you're a little confused on how to participate in the crypto market with wallets and things of that nature, the futures market, again, there are ETFs for these things. And this is COIN. And right now, this is probably reaching a short-term target. But if it takes off any further, then this will also be in an area where we're going to have to wait a little longer for a pullback. But so far, it's kind of in a target area. Still got more highs to go. So we'll see how that certainly develops. And I expect this, along with GBTC, to break its all-time high eventually. So I'm very, very bullish on cryptos. The problem is it's run up so much that now it becomes a point, if you're not already in it, are you chasing the market? And as long as you don't mind a pullback at some point, and you can handle that, then you may want to talk to your financial advisor about putting some money in cryptos. Hopefully you've already done that. All right. And yeah, Frank, we'll take a look at RIOT. This is blockchain mining company. So this one here. What I like about this one, and actually I like about coin too, but I like this one here because it hasn't had the tremendous rise that Bitcoin has, but it is a major player. And so this is one, I think, if you can get into this one, and again, use risk capital, talk to your financial advisor, the whole 9 yards, right? This might be a better entry, an early entry. So maybe a little bit in here. And then when Bitcoin pulls back, you can put a little bit more in there. Or if you're in Bitcoin, just hold it, okay? Please hold it. All right, so that's kind of where we're at now. But both of these, RIOT, I expect the cryptos to be fairly good long-term bullish moves. Don't have your stops too close. Let it run. Let it pull back and let it run. All right, but do have a stop in case for some reason, the markets are the markets. Anything can happen. So if something happens that comes along and causes a big problem in cryptos, you kind of want to get out with some profit. Okay, so keep that in mind as well. All right, see Frank's in at 1180. Good job. Okay, no reason to get out of this, Frank. Okay, just stay with it. All right, stay with it. All right, so that is that. I want to take a look at TLT. I'm often asked about bonds. So let's take a look at the ETF that represents this market. And TLT had a nice little pull up, okay, in October, like the rest of the market. And it's kind of settling in. It pulled back again. My only problem with TLT is one of my indicators over here on this chart on the far right. This is a weekly chart. So this is indicating that we will probably get up, possibly maybe a little higher. Okay, we may have a target between 110 and 127, and we're at 93. But this is red, and this is indicating this is not a final bottom. So that is creating a problem for me going into this or recommending it. So I've got to have that at neutral, which would be a yellow, or green before I'm going to recommend this. So I'm expecting maybe we could get one more push to the upside on this. So this would be what we call a wave 4 retracement. This would be a 3, and then another dive down for a wave 5. So I think this is a bullish retracement in a continuing, what I'm thinking is going to be a continuing bear market. So I don't think we have a bottom here yet. So keep that in mind as well. All right, so that's TLT. CBT is the one I also want to look at, and I'm going to look up silver, gold, and oil before we end today. CBT is a ETF, again, in the real estate market, residential primarily. All right, and so, you know, you can see it's been in a downtrend. All right, no brainer on that on the weekly chart on the far right. We've got our pyramids indicating more lows coming here. So we'll see what happens with that. We may get a little bit more, one more pullback here. This bottom certainly could hold. We could get some more movement back up for the spring, I'm thinking, because this is green. But overall, I think the real estate market, based on the PTF being red on the long-term chart, its spiral down is still to come. And so that's why I think this bubble may last a little bit longer, but eventually should deteriorate and housing prices should come down quite a bit. That's kind of where I'm looking on that. Silver, let's take a look at silver. Silver is one that many YouTubers, influencers, so to speak, have been recommending. And as I said, if you look at the charts, you've got all the information you need right in front of you. So in this case here, whether you're bullish or you're bearish on this, all right, it's been trending sideways. All right, now overall bullish on silver, but overall we got a situation where do you want to put your money in, you know, back in here and just let it go up and down? It's kind of a waste of money because your return on investment is basically nil at that point. So here's a situation where we have green and green here. So it looks like we're biased to the upside, but we're in a channel right here. So I wouldn't do anything with this, all right? I wouldn't even consider it until we get above 22. And then even then, I might want to wait until we get above 23.5. So early entry here, all right, more conservative entry once we break out. And when we break out, it should trend pretty well, all right? But you have time on this one. Now, gold, GLD is the ETF for that one, okay? At this particular place here would be a situation of more highs coming. You got a green PTF here on the far right-hand side. That's this indicator here indicating more highs. And that indicator has about a 75% accuracy rate. So it's pretty accurate. What it doesn't tell you is when is it going to come back and make another high, nor does it tell you if how deep the profit taking could be before it comes back and makes that next high. So, you know, and using it alone, it gives you great information, but by the same token, you have to be aware that there's certain things it's not telling you. Okay, so more highs coming, but it doesn't say when, but certainly, you know, if the market sells off, gold should do pretty well on this. So if you're in it right now, you can stay in it, all right? Just don't keep your stop too close because we've had a lot of volatility in it. If you're thinking about going in it, I would hold off a little bit, okay, on that one for sure. Okay, so USO is the next one I want to look at, which is crude oil ETF. And on this ETF here, my target is $99.25 up to $125.01. And it looks like we're starting to break out into that move. It's not too late to get into it if you're interested. So I'm recommending this one as a buy. All right. I think we've got a pretty good sized bottom down here on the chart on the right-hand side here. So I think we've come down, the bottom held, we're going back up. We got a pyramid here at this particular point. So I think it looks pretty good. So I'm kind of recommending this one now with a target again of 99 roughly to 125. So oil should go up, and unfortunately that means higher prices at the pump. All right, let's see what we got coming in here for questions here. CPT at bull pair. I don't think I would do anything with it, Frank, right now. Are you in it? you're in it now, all right? The reason is short term, you got to play according to the PTF here. This is a 60-minute chart, so this is an intraday chart. Probably break below 90. The problem is your stop would have to go pretty close, so it's a little bit of a riskier trade. This is indicating actually once this PTF comes down below 90, we could see a turnaround and go up. So I think you can have better plays on other types of things, okay? I don't think, it depends if you're how short term you are, but I would not take a bearish play on this until that PTF, that green PTF on the daily chart is gone. All right, that's the way I would play that. All right, so we're at the end of the half an hour. Okay, so that's going to be it for today. So I want to thank everybody for coming today. Now next week we're going to skip. And we're going to be back the week after. I have some business things I have to take care of next week, so I will be unavailable. So then we'll pick it up again the week after. All right. So we'll see how the markets do next week. But keep an eye on crypto. I think it's going to be pretty exciting. All right. Have a good one. And those of you that are clients, we have client support in about 30 minutes. So I'll see you back then. And other than that, I'll put a little music on and then we'll go ahead and close the room down. Take care, everybody.
Serving traders worldwide since 1998, TradersCoach.com provides educational services for traders and investors alike. We have developed trading software to help traders of every level improve their skills. Our site is dedicated to providing you with all the resources, software, and educational material you need to achieve your trading goals. It is because of our years of experience, attention to detail, and our exceptional customer service that TradersCoach.com is the right choice for you. Call us today.